Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, Hump Day, the 5th of August, 2020. Thanks for joining me again. This is episode number 1812. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we are gapping up in the indices, risk on sentiment across the board. The dollar's off. The dollar's taken a bit of a beating. The dollar index is trading at 92.75 and a half, down 62 and a half cents, or 0.65%. The bonds are off 27 ticks. The Bund is off 0.63 ticks. The 10 years off 6 big ticks. And then everything else is positive, including gold. Gold is really pricing in some terrible news, I guess. Gold has reached as high as 2,060 overnight, currently trading at 2048 and a half. The Russell's leading the indices up. The Russell's up 16 points or 1.06%. Crude is up $1.49, trading at 43.19 in the September contract. That's 3.57%, 3.7% currently. The Nasdaq's the weakest. Remember, this was all led by the Nasdaq on the way up. The Nasdaq's trading at 11,095.50, all-time highs, plus 8 points or 0.07. That's less than one rotation. It could go negative at any point. The S&P is up 15 and a half points, up 0.47%. The DAX is up 71 and a half points or 0.57%. The Dow's up 184. So clearly allocation to risk this morning, although we're seeing gold, we're seeing the euro, the cable, and the yen also being positive. That's with the dollar falling off. So the globe is kind of losing faith in the dollar or something. But that's how things are shaping up. In terms of earnings, we are still in the earnings season, but things are tailing off a little bit this morning. The big players that came out this morning was CVS, which is a pharmacy company, a retailer. Came in with a surprise of up 37.5%, came in at $2.64 versus $1.92, and beating its revenue numbers. What's remaining for today in terms of bigger players? Western Digital is after the market, but everything else is kind of not a non-fact. In terms of what's on the calendar this morning, you probably heard that ADP came out. This is a private payroll company that reports its employment change every month, 2 days ahead of the non-farm payroll release, and it came in at 167,000 plus 167,000. The prior month came in at 2.369 million, and it was expected to report today at 1.55 million. So it reported about a tenth of that. And so if you look at your charts around 8:15 a.m. Eastern, you'll see a nice spike down across the board. That would be ADP, basically forecasting the non-farm payrolls likely being weak this morning. So that's where that stands. We did get balanced trade today, came in at 50.7 billion deficit, in line with expectations. We do get market services PMI final and a composite at 15 minutes after the open at 9:45, and then the ISM non-manufacturing at 10. You need to pay attention to that. And then, crude oil, and then we have Mester at 5 p.m. Eastern. So that's what's on deck for today. So as always, we're going to punch right through and push into what was expected yesterday. And so that's yesterday. The main idea was the expectation that we are likely to dip down and push higher, push into this 85-ish area. I was looking for a short in this area into the push into the low volume node here for an impulse down or rotation lower. This was completely wrong and was stopped out. That was a nice little loss there, but it is just another trade. The secondary is a dip down, potentially to take out this 71.72 area, which is the next really important area here. We talked about it yesterday, 71.72, which would result then in a bottoming, which we've seen a lot of, and a push higher and a drift into the 3290 at least. The 3290 at least. We ended up playing a scenario 2 a little bit. We did not dip down far enough. We did not dip down far enough, and we maintained. Let's clear this up a little bit. We maintained a higher low from the prior session, right? So here's the push to the 85 early on, and it looked really good for about 2 minutes before it pushed through and it came back to the point of control the prior day, is squeezing to the other side. The next big area here was 95. If you recall, 95 has three tops. One, two, three local highs, so a weak high. The expectation is a pullback and a breakthrough. Nope, not today. We get a lower high for a test lower, which looks now like, hey, scenario 1 is back in play. We're going to look to get short, and we're going to target the 71 area. And if it gets through 71, it'll likely accelerate very quickly to 65. So maybe we can bank a good, 25 points here on this trade. Nope, it's a higher low that comes back into line, and then it ultimately pushes the other way. It was a very the structure yesterday was such that we are holding the gap and we're holding a higher low, and those are the two big boulders or the two big important pieces that we had for the day. But I can't trade the past, so I gotta look to see how things fail and shoot for what is likely to happen. And to me, the way this failed and the acceleration in the delta here looked to me like this low is in jeopardy. And if the low is in jeopardy, then we're likely to get into the gap zone, and 71 would be a victim of that push lower. Not so. So another stop loss right in here as it pushes back up above the prior high, and then we end up squeezing into 3,300 where we trade a fair amount of size with a high of 3,300 and a half. The important thing to note is that yesterday and the day before had a value area that's overlapping. The point of control is overlapping, and what these 2 days do is they show us that there's quite a bit of balance here. So balance is likely to lead to imbalance as always, and we end up with this profile. So let's highlight this profile. We end up with a profile, a composite profile, new composite profile that shows that 88.75 was the balancing price, and that'll likely be the target on the downside if we decide to rotate down. Not saying that we would. So that's what we had yesterday in the RTH. Let's carry that into today. So, on balance, trading those ideas did not bear fruit. It is the summer. Let's not forget that it is the summer. There was a tendency through June, July to follow through, but I can tell you unequivocally that the impulses down have quite consistently failed to get a continuation. We very, very often get an impulse down that just turns right back to the scene of the crime. Here's another one. The ADP impulse down comes right back to the scene of the crime. We're seeing this a lot, the buying the dip type of stuff. The impulses higher are experiencing the flag and continuation quite well. And that makes sense. It's a bull market. The overnight session gives us another multi-distribution profile. We've been getting a lot of those where the market is balancing and then finding another area of balance and is showing us that there's a lot of a um, pretty active price discovery, a pretty active auction and battle right now. So this is how things are shaping up. The volume overnight is in line with what we would consider to be normal these days. The point of control has shifted to the high. We've balanced up here quite a bit. It's looking kind of heavy to me on first view here, and with the close being right here yesterday, it looks like the majority of the inventory is long this morning. We may see a rebalancing back. I'm watching the full session VWAP, full session mid, and this 330403 low volume node to gauge that. But depending on what we do this morning, if we cannot take this high early on, I'm expecting the market to more likely close below. So expecting a red candle this morning on the daily. Don't know what it'll look like, but I'm looking for a red candle today. It is more likely to close below where it opens this morning. Let's not make that color your plan for the day. I'm not trying to tell you that I'm bearish, but it does look kind of heavy to me. It looks like it has exceeded. It has gotten ahead of itself with this push up. The fact that we have a gap below us, and what we've done in the past is what we've gapped up, bounce, run up, gapped up, bounce, run up, and then fixed all of it in like one day. We did so recently where we just turned around that one Thursday about 2 or 3 weeks ago, and we turned around and we repaired the entire structure underneath us in one session. We filled, I believe that one day, that Thursday, we filled two gaps and we covered like four single prints in one day. And this to me looks this like the same thing. Now, I'm not indicating that history will necessarily repeat itself, but to me, the action overnight shows that it's having a very difficult time getting higher prices. Once it got into this old stock zone here at 33.19, it is really having a hard time continuing to exceed, even though the delta remains positive. Okay, so again, trade what you see, but to me, it does look like there's quite a bit of room to the downside, and it has pushed quite a bit to the upside so far. Gold is higher. Um, I find that incredibly interesting. I think the participants in gold are definitely pricing in some continued difficulties for the foreseeable future in terms of monetary policy and the macro picture. Here's the order flow picture, the heat map. As you can see, it's pretty dodgy up here. We do have a strong bid now. Remember yesterday we had a strong offer, multi-day offer at 3,300. We have a strong bid there. We have a strong bid that coincides with my stock zone in the 330607 area. And then up here, the 3322, really, I'm not seeing a good reason for that. 3330 is probably a price, a strike price, a strike play, but we can see that there's a big void above and below where we are currently. 7 points up, 7 points down. There isn't much there right now. We've been balancing for a fair amount of time now. And as I pull in more data here, you could see that the market is really, what's going on? Okay. You can see the market is really kind of staying wide in terms of the bids and the offers. Okay, so let's leave that behind. All I'm saying is, pay attention to the 23 through 27 area. The 3330 is likely to be stable. And then, of course, 3300 is likely to be stable. And then 3290 is both a point of control and high liquidity. This would be the target to the downside right here. Okay, that gets us the overnight low, it gets us yesterday's point of control, it gets us this liquidity, and it gets us a retest of this really important stock zone at 3290 below. Okay, so let's move on to what's expected for today. By the way, have you checked out EdgeClear? Have you been to edgeclear.com? Have you looked at it? We're releasing a new app called EdgeWatch, which is a metrics performance app. It's not for public release for anybody here. You can request it. It runs on Rhythmic only. The current feed that I use is Rhythmic. It's my favorite feed. I think it's the most stable feed out there, in my opinion. Okay, so here we are. So this is yesterday's RTH right here. Okay. And we could see the point of control of 3290 down here, and we could see that the market is ahead of the VPOC and so on. The expectation this morning is an open auction that is likely to respond up higher into the 19s. I'm expecting it to battle up here, poke through, and then I'm looking for some sort of an impulse uh, down back in. I'm not going to trade this on the way up. I'm just going to let it go, and I'm looking for a push to the downside that brings us back into 3306. Consolidation, probably a bounce, and then hopefully a swing down that starts to do some of the repair and moves us back into the gap zone. We're opening the gap. Gap rules apply for this morning. Gap rules apply for this morning, and we'll see how that goes. Otherwise, we will likely get responsive selling, inventory balance that brings us into the overnight VWAP and the overnight mid, and then consolidates here at 3306, potentially poke through. Then we get the impulse, the classic V bottom, as we've seen recently, an impulse back up, consolidate back into the open, and then we continue our grind higher. And the next area up of interest is 2750. The high is 2175, and we have that heavy liquidity at 30 above there. Okay, so that's how things are looking this morning. Cool. All right, so I'll leave you with that. Look, I could draw all kinds of lines on here and I can project and visualize all I want. The fact is, we just need to remember the important areas that matter. So these are the stock zone areas. These are, if it does release and push through the low volume nodes here, what are we going for? We're going for yesterday's high at 3,300. We're going for the 3395 area, and then the big area to test is the 3390. So the big areas 90, 95, they happen to be strike prices as well. 3300, right? And 06, 19, and 27 to 30. This is what we need to remember. How it gets there, what path it follows, that's just arbitrary. But I do want to see that they test the overnight high and see how it responds. If it tests the overnight high and it continues to stay bid and pushes in that direction, then the rotation down has failed. Scenario one has failed. Likely a stop loss there. But if it does push the overnight high, there's just no more lifting, or they're lifting and if the price is not complying, then we're looking for a quick short, and we're looking for the rotations. And once we take that quick short, we're not going to go for 2 points, risking 6 points. We're going to look for it to rotate down from there 20 points or so. And that's what's important about the visualization game here. Okay? Good luck, and I'll catch you tomorrow morning. Take care.